Do you want to know how to find new investment ideas the best way possible? I'll let you in on a little secret. Monitor successful investors' investing portfolios. Large investors in the United States are required by law to publicly disclose every U.S. stock they acquire and sell. Why is this so crucial then? The average investor can use this requirement as a great resource to find new investments to add to their own portfolio. The fact that huge investors are forced to give out their greatest investment ideas for free makes them despise this necessity, yet our gain comes at their expense. In this video, we'll examine the stocks Warren Buffett has recently purchased and sold. Suffice to say, he has been quite active lately. You'll want to watch this video through to the end because we'll go over each of the 9 stocks that Buffett recently purchased. But before you do, please like this video and subscribe to the channel if you haven't already done so. My goal is to help you become a better investor by studying the world's greatest investors. One of the equities Buffett's firm Berkshire Hathaway bought in a major amount recently is a company named Ally Financial. Buffett bought an additional 21 million shares in the company, and Berkshire now owns 30 million shares of this company, worth approximately $1 billion as of the making of this video. This translates to a stake worth 9.7% of the entire corporation. Ally Financial is a bank holding company, which is just a fancy way of saying the company covers multiple financial products. Just as a side note, this stake represents less than 0.3% of Buffett's overall portfolio, but he owns about 10% of all of the company's stock. The corporation provides financial services including car finance, online banking via a direct bank corporate lending, vehicle insurance, mortgage loans, and an electronic trading platform to trade financial assets. However, almost 80% of the company's revenue comes from lending to or insuring the auto industry. Lending money to customers as well as to car dealerships directly generates corporate sales. This makes perfect sense given that General Motors, which was virtually forced to sell the company after running into financial difficulties during the Great Financial Crisis, once owned Ally Financial. The stock price of Ally Financial has been struggling. So far this year, the stock price is down roughly 35% from its high this year back in January. Although it is no secret why Buffett would favor this name, he is adding to his position in typical Buffett form by taking advantage of the stock price's weakness. Despite having a dominant position in an industry that has been around for 100 years and will likely continue to do so for another 100, Ally's stock only trades at a 5 times price-to-earnings ratio. The company generates a ton of cash, having generated $2 billion in cash over the last 12 months. That cash was used to buy back stock, as the corporation repurchased approximately $1.2 billion in stock during the last 6 months. Buffett is a big fan of businesses buying back shares when their stock is trading at a discount, and the company has already done so for about 10 of the outstanding shares as of the end of 2021. As the company buys back shares, it increases Buffett's stake in the company without him having to buy any more shares himself, considering Buffett's Berkshire Hathaway owns nearly 10 of Ally. Buffett already had a sizable investment in the corporation, so the company's huge share repurchases immediately boosted his holding. It will be interesting to see if he continues to buy or if he even eventually attempts to purchase the entire company. The next stock Buffett bought large amounts of in the quarter is Occidental Petroleum. This company explores Ford, develops, produces, and markets oil and natural gas. Buffett now owns over 158 million shares of the company, making Berkshire the company's largest shareholder at 20. The Berkshire Hathaway portfolio increased by over 22 million shares. Buffett understands this business well. He originally invested in Occidental back in 2019 when the oil company was in a bidding war with Chevron to buy its crosstown Houston rival Anadarko. However, shortly after Buffett made this investment, the price of oil tanked from a high of around $80 a barrel in 2018 to price in the 20s and 30s per barrel in the first half of 2020. You may be able to guess how crucial oil prices are to the success of the firm, given that Occidental is an oil company. As a result of declining oil prices, Occidental struggled. Interestingly, Buffett even sold all of his ordinary shares in Occidental during the oil slump of 2020. However, the price of oil has rocketed to a high of over $120 per barrel this year and has spent much of 2022 above $100 per barrel. Buffett's perspective on the business has completely changed. He went from selling all of his common shares in the company to becoming its largest shareholder just 2 years later. But it doesn't end there. Buffett recently made a huge announcement. The federal government gave Berkshire Hathaway permission to purchase up to 50 shares of Occidental. What do you think about this news? Buffett may now continue to purchase shares in Occidental until he reaches the 50% threshold, at which point he may make an offer to acquire the entire business and buy the remaining shares at a discount. Given that Western Petroleum is worth almost $70 billion, a premium price. This would be one of Buffett's biggest purchases, if not the biggest. But I wouldn't be surprised if it did. Buffett has long claimed he's been wanting to make a significant acquisition, and this might be his time. Priority Global is the next stock on our list. Buffett purchased 9.5 million extra shares in the company, bringing Berkshire Hathaway's interest to over 78 million, or nearly 13% of the total company. As a media firm, Paramount Global creates and disseminates entertainment material via studios, networks, streaming platforms, live events, and merchandise. The business runs 3 separate components. The cable network segment is the largest and accounts for 45% of revenue. All of the cable networks, including Showtime, Nickelodeon, MTV, Comedy Central, and the other big networks, are located here. The television entertainment segment accounts for about 45% of the business's income. The third portion is made up of the company's streaming service and the CBS television network. The company makes movies for cinematic pleasure. Top Gun: Maverick was one of the business's biggest successes in recent years. With a market cap of little over $16 billion, Paramount presently trades at a 11.4 times price-to-earnings ratio. Buffett has extensive knowledge in the media industry and has been investing decades in it. Warren Buffett was a Capital City ABC company's greatest shareholder in the 1980s and 1990s. This corporation, which owned television and radio stations across the country, later merged with the Walt Disney Company to become the media behemoth that is today's Disney. Celanese is the 4th firm on our list of the equities Buffett is adding to. Despite the company having a market worth of over $12 billion, he now owns 9.2 million shares, or 8.5% of the total, making up his total ownership. I believe it's accurate to state that the typical person is not very familiar with the Celanese. I knew they were a chemicals company because I had heard the name previously, but that was about it. The simplest and most straightforward way to define what Celanese, a multinational chemical and specialty materials firm, does is that it sells chemicals that are then utilized to manufacture things. These chemicals are sold to businesses, to mention a few, in the automotive, building, paper and packaging, food and beverage industries. If you're a fan of Warren Buffett, you undoubtedly already know that he enjoys investing in profitable businesses, and Celanese certainly fits that description. The business is on track to produce free cash flow of almost $1.6 billion this year. Free cash flow is computed by taking the cash that a business generates from operations and deducting the amount that it spends on capital expenditures. If you compare that free cash flow to the company's current market valuation of $12 billion, that equals a free cash flow yield of 13.3% for Celanese. These are things like machinery, real estate, a new factory, etc. If all else is equal, the better, the higher the free cash flow return. The more cash the company creates relative to the cost you as an investor must pay for it, the greater the free cash flow yield. For comparison, the stock with Buffett's highest portfolio investment has a free cash flow yield of 3.8%. Let me know in the comments if you have any other questions about investing. Let's return to the video. Markel is the 5th stock on our list. Buffett purchased 47,000 shares of the company, which may not seem like a lot given that he also bought millions of other shares. It's crucial to keep in mind that each share of Markel now trades for more than $12,000 compared to shares in the other companies. With this acquisition, Berkshire's stake in Markel increased to 3.5%, making it the company's fourth largest stakeholder. The best way to conceive of Markel is as a baby Berkshire, which refers to the fact that Markel shares the same fundamental business strategy as Berkshire. Berkshire Hathaway is an insurance firm. It owns several insurance companies that produce what is known as float in the insurance industry. An insurance firm can hold onto that float, which is effectively money, before paying claims. Consider the following scenario. You buy an insurance policy for your home or automobile, paying the premium in full, which means that the insurance company gets the money before it needs to pay any claims for damage to your home or car. The insurance business has the option to invest that money to create investment income between the time it receives the money from its customers and the time it has to pay the claims. Even though it might not seem like much, insurance firms actually profit from this scheduling discrepancy. Markel has the same business strategy as Berkshire Hathaway, which ended 2021 with a staggering $147 billion in float that they could invest in. Their primary business is insurance. They invest in stocks and buy entire companies using the profits and float from the company's primary insurance businesses. The Baby Berkshire nickname is a result of Markel doing it on a much smaller scale than Berkshire Hathaway. While Berkshire Hathaway's stock holdings are more like $300 billion, Markel's stock portfolio is only about $7 billion. Interesting enough, Berkshire Hathaway holds the greatest holding in Markel's stock portfolio. Markel is ranked as the stock's 13th largest shareholder. McKesson is stock number 6 on our list of the equities Buffett is still purchasing. Berkshire currently controls 2.2% of the company and is the 6th largest stakeholder after Buffett purchased 276,000 shares, raising the total number of shares held by the company to 3.2 million. McKesson is a distributor of drugs and medical equipment in North America. McKesson can be compared to a pharmaceutical wholesaler since they procure branded and generic drugs for producers and distribute them to pharmacies. Pharmaceutical wholesalers act as a middleman between, on the one hand, very huge and very fragmented marketplace. 1,300 manufacturers exist, including Pfizer, Eli, Lilly, and Teva. On the other side, there are more than 180,000 distribution points, including hospitals, Walgreens, CVS, and your neighborhood Walmart. McKesson generates enormous amounts of income. Over the past year, the firm brought in close to $270 billion. However, only a relatively small portion of that revenue is converted into profits. With the $270 billion in sales but only $3.5 billion in net profit, the corporation had a net profit margin of around 1.3% according to the math. Apple, Buffett's largest holding, had a net profit margin of 25.7% during the previous 12 months. To put that into context, Coca-Cola, which Buffett has also held in high regard, had a 26.1% net profit margin in 2021. McKesson does have one crucial quality that fits in nicely with Buffett's philosophy, despite the thin profit margin. Buffett refers to McKesson's competitive edge as a moat. A moat is a barrier that keeps other businesses from entering a market and stealing consumers. A corporation needs scale advantages owing to its vast size in order to successfully function with very low margins. Hence, McKesson's size is its main competitive advantage. Activision Blizzard is stock number 7 on our list of stocks Buffett is still purchasing. Buffett increased his ownership of the company by 4.1 million shares to 68.4 million. With 8.8% ownership of the corporation, Berkshire is the largest shareholder. One of the biggest producers and distributors of video games worldwide is Activision Blizzard. World of Warcraft, Overwatch, Candy Crush, and Call of Duty are some of its franchises. You might be asking yourself a crucial question. Why would Buffett A 92-year-old man invests in a company that makes video games. He has no knowledge of video games. Therefore, you are correct that this is not a typical Buffett investment. An example of a merger arbitrage bet is this. Let me give you an example. In January, Microsoft announced that it would buy Activision for 95 cents per share. Given that this is the price at which Microsoft said they would be purchasing the shares, the price of Activision stock would be trading at 95 until the transaction closes. That is how most publicly traded companies are acquired. However, there is a significant difference in this acquisition. There is a considerable possibility that the government won't accept the acquisition, so it's not 100% likely that the government would let Microsoft buy Activision. This is the reason why Microsoft indicated they will buy the shares at $95 per share if they receive regulatory clearance with a merger arbitrage investment. However, the stock of acquisition trades at $78 per share, an 18% discount to that price. Buffett is betting on the acquisition to go through if the deal does go through, rather than investing in the firm as he usually does. His investment will profit from the difference between the price Berkshire paid for the shares and the 95 per share acquisition. But there is one significant risk involved if the agreement is rejected and Microsoft is unable to complete the acquisition. The outcome of a merger arbitrage bet depends on two factors: whether the deal will go through and how much money you will make or lose. This is similar to what happened when it was revealed that Elon Musk would no longer be buying Twitter. Buffett certainly likes his chances, since otherwise he wouldn't have made the investment. Due to the fact that positions 8 and 9 on the list were both very tiny purchases of two substantial assets in the Berkshire portfolio, they will both be discussed together. These equities are Chevron and Apple. Buffett purchased 3.9 million shares of Apple, increasing Berkshire's overall ownership to 915 million shares of the tech business. When you consider that Apple is presently valued at $2.6 trillion, yes, trillion, and that Berkshire stock is valued at $148 billion, 5.7% ownership of the corporation may not seem like a significant holding. Buffett also bought 2.3 million shares in the oil giant Chevron, increasing Berkshire's ownership of both companies to 163.5 million shares, or 8.4% of the overall business. There is a reason I mentioned these two equities together, even though Buffett controls a portfolio of about 50 different stocks. Talk about a concentrated portfolio. These two stocks, Apple and Chevron, account for approximately half of the total stock portfolio, with Apple accounting for the majority of that at 42%. Warren Buffett typically states that he wants to have a concentrated portfolio of stocks, although Buffett has in fact come under fire for claiming that his stock portfolio is highly diversified. Hope you have learned something from this video. What are your thoughts? Comment down below. If you enjoyed this video, make sure to click the like button, and also don't forget to subscribe to the channel and hit the notification bell for you to be updated on our latest videos. See you in the next video. Thanks for watching. Want to learn more and be more financially literate? Click on the next videos we have in our channel, showing on the screen right now.